Good morning and welcome to our workshop week starting the 30th of September. Last day of the month, last day of the quarter, so a new month and a new quarter tomorrow, 1st of October tomorrow. Very busy week on the data and events front. However, the markets very soft this morning, equities taking a big hit, bond markets steadier, the dollar pretty mixed really. All on the back of the headlines overnight and over the weekend, very much to do with this fiscal standoff in the United States. Headlines such as US shutdown fears weigh on markets, US government shutdown looms after House vote. And it is extraordinary the way the US, the world's largest economy, i.e. the US, has got to this impasse again. But basically, parts of the government are going to shut down at midnight, and this is the first time since Bill Clinton's Democratic administration in 1996. So it's likely that that'll have a persistent effect on the markets for some time until it is resolved. An interesting analysis by Goldman Sachs suggests that the government shutdown could cost the US economy up to $8 billion each week that the shutdown occurs, and this is based on evidence from the last one that happened between, well, really Bill Clinton and the Republican House Speaker Newt Gingrich when the federal government was shut down for nearly 21 days. So all in all, not very good news for the markets, and the markets have really taken a little bit of a knock. In addition, we've also had the Italian news over the weekend as well, where the Prime Minister is now having to seek support for a new government after Silvio Berlusconi pulled his ministers out of this 5-month-old coalition, which has really caused a few problems. And I know that conversations between Mr. Letta, the Prime Minister, and the head of state suggest that it's not going to be that easy, but he's looking for the Prime Minister, Mr. Letta, is looking for a vote of confidence in a particular scenario or resolution on Wednesday. Certainly that'll undermine the MIB and the BTPs for sure, and possibly the euro might take a little bit of a knock on the back of it. Anyway, on to the week this week. It's all non-farm payroll, that is unemployment or employment data this week. It's going to be dominated by that. We also have manufacturing PMI both in UK, Europe and the US. Greenspan speaking, a couple of interest rate decisions from Australia and Japan to throw into the mix. So a very, very busy week. We've already had the report from HSBC, the manufacturing PMI overnight from China. A lot weaker than expected. Preliminary data at 51.2 suggested a strong rebound in manufacturing, but the final bit of data at 50.2 is anything but that, marginally in expansionary mode, but very disappointing, which suggests that perhaps the manufacturing rebound in China could falter. That will have an effect on the Aussie and the New Zealand and the Canadian dollars. We have GDP in Canada this afternoon at 1:30 p.m, but the real thrust of the data is all the manufacturing PMI. We also have the Chinese own state reading on the manufacturing PMI overnight for China. We have the Reserve Bank of Australia's interest rate committee announcement at 5:30 tomorrow morning, not expecting any change there. And then we have a plethora of manufacturing PMIs from Europe and the UK, in between sort of 8 and 9:30, and then we head out into the States tomorrow afternoon. We get the ISM manufacturing PMI, a very important number really. Some of the data consensus forecasts have been missing more recently with durable goods and consumer sentiment last week, although interesting to note that weekly unemployment data was quite steady last week. So it'll be interesting to see how that comes out 3 o'clock on Tuesday afternoon. And then we have the first look at the employment situation on Wednesday with the ADP, the private payroll company there, reading on non-farm employment change. The numbers don't look good. We need a lot stronger number really for any suggestion that the Fed may start to taper. So 177 is the forecast there. We also have the minimum bid rate from the Europe, so that's the interest rate decision from the ECB. They announced that at 1:45 on Wednesday, I should say, followed by a press conference at 1:30. Bernanke is also talking. Chairman Ben Bernanke, from the Chairman of the Federal Reserve, at least for his last couple of months, talking at a state, in St Louis, community banking. It's unlikely he's going to say much that could spook the markets, but worth noting, 8:30 on Wednesday evening. And then we come on into the ISM non-manufacturing, the services PMI. It's called non-manufacturing in the United States. We call it the services PMI, both in the UK and Europe. A lot of data there, as you can see. Make sure you know what the consensus is. Not so important, certainly in comparison to the manufacturing, although you'd wonder why, because the services sector is by far and away our largest sector here in the UK. And then on to the main event of the week, as already stated, is the non-farm payroll or non-farm employment change. We exclude the more volatile farming sector because it's very sort of seasonal, so that's why it's called non-farm. Very weak number, really, or unimpressive number. 179,000 is the consensus. Unemployment sticking at 7.3, although, as we've known from sort of recent analysis, that number, the unemployment rate has been distorted by the number of people that are actually no longer seeking work, which has tended to push that unemployment rate down, which is giving a slightly false reading. And that's it really for the week. A very, very important, busy week. The key events are almost undoubtedly the PMI ISM manufacturing data in the US, followed by the ADP data on Wednesday, and then the main event, non-farm employment, on Friday at 1:30. Markets will be watching very closely any developments in Congress and indeed Italy. So a busy week on the news and events front. Thanks very much for listening. Good luck with the markets. We will reconvene again on Thursday morning at 8. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.